Here on the Colour of Country Life Flow FM, we're with Matt Dalgleish from Thomas Elder Markets. You heard from him earlier in the week with Wayne about the climate controversies, but here we're talking about the sheep and beef reports. G'day, how are you going, Matt?
G'day, Ricky. How are you?
Good, thanks. Look, how did things travel? Let's start off with sheep. Looks like things have taken a little bump upwards, but they've been really falling, and probably the usual spring correction.
Yeah, that's right. This time of year, we do tend to see some pressure come into pricing, particularly for lamb. And we have seen that, a couple of weeks back, down to the kind of into the teens, just ahead of 800 cents carcass weight. But this week we've seen a bit of an uptick for most of the lamb types, and something like the trade lamb indicator is the key benchmark that's just above 850 cents a kilo at the moment. So a little bit of an uptick, but that's kind of a bit unusual. But I think they're still going to continue to see pressure on those lamb prices as those Victorian lambs in particular keep coming.
At Thomas Elder Markets, you guys have watched the prices for some time. This is me as a layman wondering about this with the wet weather and the sheep grazier warnings. Could there be a little bit of a slow movement in the markets where farmers just worry about what they've got in the paddock rather than looking out to get some more? Yeah,
that can be the case, and certainly it's a very wet season coming to this spring. It's a bit cold, so there's a bit of a lack of pasture growth, but that wouldn't take much if we start to see the hotter temperatures start to creep in. We'll get a bit of pasture growth. And that can sometimes encourage producers to just hang on that little bit longer and put a little bit more weight on. And if that's the case, we could see prices easing, but at a slower rate. I think, though, if you look at the lamb indicator where we're sitting now compared to last year, most lamb prices are actually slightly higher than what they were this time last year. So there is a bit of room still to come off. And I just think once we start to see those numbers flowing, and Victoria is the key, Ricky, for that. Once they start flowing, we'll start to see that price ease again back towards that low 800 cent level, and it might even dip below that into the kind of 700s.
Right, now something that we've talked regularly about defying expectations is what's happening with the Eastern Young Cattle Indicator and prices there. They're stubbornly staying up around well above 1,000 cents.
Yeah, that's right. It's actually been kind of trending sideways for the last few weeks around that 1060 area. And I expect we might start to see some kind of pressure creep in on that price. If you look at what's been going on with beef exports through October, we have seen a couple of key markets start to soften. In Japan and China is also off a little bit of the boil for beef exports. But the big concern is actually South Korea. We're just about to hit what they call a safeguard measure in terms of tariffs. And so for the rest of the year, our tariff on Australian beef is going to go from about 21% up to 30%. We've seen the same happen the last 2 years where we hit the tariff in South Korea, and that slowed our beef exports to South Korea for that last quarter. And it's likely we're going to see that through November we'll hit that tariff. So that could start to kind of flow through to lower export kind of pricing, and that could take a bit of the steam out of the young cattle market as we head towards the end of the year.
That's quite interesting. I'd seen other commentary, I think might have been from Rabobank, indicating that they saw Korea as a healthy market going forward, but that seems to restrict how much we can send there.
Oh, look, it is still a healthy market, and it's been a really good, strong market for us for the last few years. And in fact, this year, it's the first time ever we saw South Korea become our second most popular destination for Australian beef behind Japan. Normally they're about fourth spot in terms of, volume or percentage of flows. So that they have been booming really. And this is just, I guess, a sign of our success. The fact that we've hit this tariff, and it's, like I said, this will be 3 years in a row that we've hit this safeguard tariff. So, overall it's probably a good thing, but it just means that it might take a bit of that price pressure out for the rest of this year. But they should be back on track again once we clear the tariff next year. And as we keep going forward, we've actually got a free trade agreement with Korea. So we're going to continue to see that situation improve as the years progress for the Australian producer.
Good news. It seems a bit like a sporting team where you've got the problem where you've got to cut a very good player because you just can't fit him in the team. It's that's how well things are going.
Exactly. Yeah, too many good players for the team at the moment. And look, broadly speaking, our export markets, whether you're looking at the beef market or the sheep and mutton market, we've got plenty of diversity in that space in terms of eager clientele that want our fantastic Australian products. So these kind of little hiccups here and there with a particular destination they're really only short-term hiccups. The broad market is very strong, and it should give producers a lot of confidence going forward.
All right, well, you've got regular analysis going up on your website, Matt. Where can people go to get that?
Yeah, it's www.thomaseldermarkets.com.au, Ricky. There's plenty of stuff on there across a whole range of commodities.
All right, thanks, Matt. We'll catch you again soon.
Cheers, mate. Take care.